Hi there, welcome to Kneppy Invest. I'm going to do a bit of an update to the performance of three of my portfolios. Also, have a look at some charts of companies I will be following closely in the upcoming week for a potential trading buy, not a long term buy or even a medium term buy. These would be just short term buys, riding some positive news or momentum in the share price. So let's have a look at the performance of my three portfolios up until the end of trading on the 4th of August. Now, I have slightly tinkered with the makeup of these portfolios because I really wanted the makeup of these portfolios to be crystal clear in my thinking. For example, in my longer term portfolio, I just wanted high quality companies that I'm willing to own for the long term. So in this portfolio, I won't follow the charts all that often, maybe on the odd occasion, every week, maybe 2 weeks, maybe even a month. I'll look at the charts for these companies, but I don't care about the short to medium term movement in the share price. I plan to hold these companies for as long as possible or until the reason I bought into this company has changed. So at this point in time, this long term portfolio, since the start of the financial year, is up 3.24%. Now, there is a bit of a currency gain there because I do have a fair few holdings in overseas exchanges. But the main thing here is this portfolio is so far beating the market or the benchmark, which is the STW. Now, there are a few companies in here which at this point in time, a little bit undecided about whether it belongs in this portfolio. And a perfect example of that is A2 Milk. I don't necessarily think A2 Milk is a high quality company, but it has its place in this portfolio right now. Other companies in this portfolio include Breville Group, which I believe is the best performer. Yeah, Breville Group is the best performer. Nick Scali, WiseTech, Fiducian Group, Corporate Travel, Domino's Pizza's in there, even though they have some problems. I still think that's a high quality company. REA Group. And now there's a lot of companies I don't have this portfolio right now that I would like to add into this portfolio. And I actually am developing a watch list right now. And that watch list is simply titled High Quality Wants. And I'm just going to build that portfolio or that watch list over time. And those are the companies I want to add to this portfolio. And the reason behind that is I think I am not underweight, but I don't have enough money within this portfolio at this point in time. And there are quite a few really good quality companies I don't own at this point in time. Now, on to the performance of my other two portfolios. Now, I still call the next portfolio a trading portfolio. And that's not exactly right after I have slightly adjusted the makeup of these portfolios. Now, in this particular portfolio, and this is my largest portfolio by far, in fact, it actually has performed fairly well, up 6% compared to the benchmark 1.8%. So maybe I shouldn't be focusing on my long-term portfolio. Maybe I should be focusing on this. But the makeup of this or the companies within this portfolio are not high-quality companies, but a lot of these companies, I hope, eventually become high quality. And I hope as I transition from low quality or no quality at all to high quality, I'm a holder, a shareholder. And I think that's the sort of the period of time in a company's life cycle or lifetime that there is going to be a significant re-rating in the company's valuation. So at this point in time, the best performing company since the start of the financial year is Ansarada. We also have Doug, XRF Scientific, Kogan's in this list. So Kogan, I don't consider that to be a high quality company just yet. I'm still waiting for for that company to show me signs. EZZ Life Sciences, Energy One, Phineas Group, Enero Group, Duratech. Some companies in this I am more likely to be trading. SG Fleet is one of those companies. I was thinking of taking profits with a company called Task Group, up a little bit. Tyro Payments is another one. Hillgrove Resources, which is a mining company that will be going to production. Playside Studios, Laserbond, IPD Group. Smart Group is another company which I might be trading a little bit. Service Stream is definitely a company I'll be trading that. And then down we go. So a lot of companies within this portfolio. Johns Lynn's Group is a company I think is very close to becoming a high quality company. And then the worst performer in this particular portfolio is XTech, which is actually a profitable company. and has grown significantly over the last few years. But for some reason, the market absolutely hates that company right now. Has a PE ratio of something like 2. And as I mentioned, performance of this portfolio has done really well, up 6% compared to the benchmark 1.8%. So we're talking about not quite 4 times the benchmark performance. But it does not beat the performance of my other portfolio, which is an absolute trading portfolio. In fact, an hourly portfolio, I call it, because I'm using or looking at the real short term, looking at hourly charts. And this portfolio is up almost 10% compared to the benchmark 1.8%. And because I'm probably am a little bit more active in this portfolio, there is that opportunity that this can perform significantly better than the other portfolios. That's the way I look at it. If you are a little bit more active, you should do better than those portfolios that you're way more passive, because otherwise, why would you be more active? So, done really well on this one. Nuix, taking profits with Nuix. Share price actually gone up since I took profits a little bit. Had a good winning trade with Mesoblast, then a slightly losing trade, but thankfully I sold out of Mesoblast before the share price plunged. I've taken 2 trades with Electro-Optic Systems. The first one was successful, up 26%. Taken another trade, and then that's up about 8%. And then we also have Megaport, Genus Plus. I've taken a trading position in Tyro, MMA Offshore, which possibly, again, this is another scenario here. Some of the companies within this list I might actually transfer to my trading portfolio, the sort of the medium term portfolio, those companies that possibly have the potential to become high quality in the future. Downer, RPM Global, which is another company that might belong in my other portfolio, Bravura, and I'm also trading A2 Milk. So I'm not afraid to trade companies I already own. There are a few reasons behind that. Integrated Research and EML Payments. I had an unsuccessful trade with that company. But the main thing and the logic behind this particular, maybe not logic, but what I'm doing in this particular strategy is limit my losses and ride my winners. So I'm aiming between at least 20 to 30% return in all these, in any sort of trade. But if the share price doesn't move in the direction I think it should move, or I want it to move, or I expect it to move is probably the best way, then I will take my loss. So for email payments, the loss was minimal. We're talking about 5% loss, while my gains so far have been 28, 26, and Nuix, I think, was 32% gain. That's why this portfolio is performing really well. Ride the winners, take the profits when it's up a fair bit, and then when the company share price doesn't move in the direction I expect, then take the loss. And I probably should be selling out of A2 Milk because it hasn't moved in the direction I thought it will. So we'll have a look at the charts in a second. I'm also doing this little spreadsheet in Excel. This is online Excel, I think. And this is where I put in some of my stop losses, that sort of thing. I've been a little bit slack. I haven't put in Baby Bunting and SiteMinder, which is 2 holdings or 2 positions I've added in the last trading day of the week. So I haven't quite added those yet. So yeah, so Nuix took profits when it was up 32%, Electro-Optics up 26%, Mesoblast up 28%, and then losses with EML Payments and Mesoblast, but only down 6% and 8% in those losses. So the idea for this is to get at least 60% success rate. If I get a 60% success rate, I should have pretty good returns. And at this point in time, the holdings I have in this portfolio, Kogan up 24.7%, Megaport up 18.3%, and then we have quite a few companies where I am up around about 6 to 7%, including Genus Plus up 7%, Tyro up 7.7%, and the second trade in Electro-Optics up 7.7%. And the biggest down company is Integrated Research, which is only down 5.6%. So now let's have a look at some of the charts and some of the companies that I am trading within this portfolio. So Kogan has been a little bit volatile, but it's still in a beautiful hourly uptrade. Not only hourly uptrade, it's in a beautiful daily uptrade as well. Broke out and the 19th of June, and the share prices just kept on going up. So I think sentiment in this company has shifted. They did release trading update or something like that, and the market reacted well to it. So I think possibly things have turned around for Kogan. Doesn't mean the share price will keep on going up. I think we will see times where the share price will dip back and that sort of thing. But daily chart looks good, hourly chart looks good, and no reason to sell out of and take profits with Kogan just yet. They've been very close, but not just yet. Tyro Payments, a little bit different when we look at the daily chart. It is not in an uptrend. So I'm less confident when the charts of companies are not in daily uptrends and 1 hourly uptrends. If the chart's in a 1 hourly uptrend but not a daily uptrend, I have less confidence in that. And when we look at Tyro Payments hourly chart, it's was fairly strong up until Tuesday, the 1st of August. Share price got to above $1.40 for a brief period. Then we saw the nice little pullback in the share price, and it has a nice little bounce right on the support area. So Tyro Payments, hopefully it'll keep going up. I want to see share price of this company get above that old high we saw on Tuesday, the 1st of August. Love to see share price get up to about $1.45, get to a new high. If we don't see that new high within a few weeks, and the share price remains above $1.25, more than likely I will sell out because the share price is not moving in that direction. I want it moving upwards, maybe just going sideways. Now, Genus Plus doesn't belong in this portfolio, possibly should belong in my other portfolio, not the high quality one, the long-term one, but the chart looks nice. Daily chart looks nice. Hourly chart looks nice, so I've decided just to hold this in this portfolio. Downer is another one which has seen a little bit of a pullback on the hourly chart, but the daily chart looks still pretty good. So no reason to take any profits with that company. On the daily charts, just moved into a nice little support zone. So I would want to see the share price not get any lower than $4.10. That is sort of a stop loss, $4.10. The reason if I see the share price get below that and I'd sell out is because that's the lows we saw back on the 7th of July. You can see the share price just going sideways when it broke out. And so that's a good area of sort of demand for Downer. Downer did release some sort of announcement during the week, and share price didn't react all that much, or the market didn't react all that much. Megaport still going up. So hourly chart looks nice. We've had two periods of consolidation after their was it the Appendix 4C where the share price just took off, or was it something else? I forget. Anyway, two periods of consolidation. Share price, there's been no selling, so share price hasn't dipped back. This is exactly what we want to see when a share price is in an uptrend. Nice periods of consolidation, get rid of all those who want to sell out, and then the share price can take off again. And also, when we look at the daily chart, it's looking much better as well. Share price has moved into an uptrend there. Integrated Research, I took a position in this company because they did release an okay report. I do think there is potential this company is significantly undervalued, particularly if they can continue showing signs of turning the company around. But when I look at the hourly chart, it is going sideways. And I've mentioned this before, that I think there was a large, maybe not large, but there was a fund manager selling out whenever the share price did rally up above 45 cents. We saw some periods of big selling. So I think they were dumping on market. And whenever they dumped on market, the share price fell 2 or 3 cents, and then the share price rallied again. And then we saw some more dumping. A2 Milk. In fact, I've got to stop it here because I have a visitor. Now I'm back talking about A2 Milk. I'm not sure why I have this in this particular portfolio because there's no trend in the share price at all. So share price hasn't moved much from when I bought in. And one of the reasons why I haven't sold is because the share price hasn't fell below my stop loss. But it's not really moving in the direction I expected it to, and that's going up. And I think I'll just take maybe a very small loss in this position and find something else to buy into. Collins Food is another company that released a pretty good result or something. Share price took off. You can see the share price taking off on the 26th of July, increased a fair bit. Share price has been going sideways or just gradually going up slowly. And when you also look at the daily chart, share price has broken through the downtrend as well. So I think I am going to maintain a holding in this, but even though the share price is not increasing at a big rate, there is a possibility you could see the share price really take off because I think there's still a little bit of resistance there because of shareholders who bought in higher prices in the past. But the main thing here, the share price hasn't dropped a lot at all. In fact, that means there's enough demand to buy all that supply from shareholders who bought in higher prices in the past. RPM Global is another company which I bought on a nice little announcement from the company. You can see the breakout on the 11th of July, just breaking above a nice resistance, pretty strong resistance level, and it's remained above that resistance level. Nice rally in the share price just after that, nice pullback in the share price, and I really want to see the share price now take off again. So we'll have to wait and see. And when we look at the daily chart, there is a fair bit of resistance because the share price has been at higher prices over the past year. So that's probably the main concern about RPM Global is even though the hourly chart looks pretty good, the daily chart, it's not necessarily in an uptrend just yet. And the share price is not at actually it is not quite a 6-month high, but I would prefer the share price to have been lower, significantly lower in the past year. So I would prefer the share price to be at least a 1-year high. Now, MMA Offshore, I have no idea about this company. This company's chart looks absolutely stunning. This is a daily chart. So for those who haven't, who are maybe new to this channel, I took a position in MMA Offshore way back in February 2022 at about 47 cents when the share price broke out. And then I maintained a holding all the way through to sometime in May. And then I took profits, share price had doubled, and the share price was going sideways. So I thought maybe this is the end of the MMA Offshore story. But then the company did release some good news. When was it? The 14th of July, and the share price has moved into a nice hourly uptrend. And we also saw the share price get to a long-term high. When I say long-term high, we're talking about last time share price this high was 2019. And you can see the share price significantly higher back in 2014. This company is potentially the classic turnaround story. They've changed their business model. They're more diversified, and they still do the same things, sort of the same things, but they're more diversified. And I think this company has the potential to be much bigger in the future. And I think even fund managers are seeing that. That's why the share price has gone up a fair bit. Mount Gibson. I think there is potential. This company is really, really cheap, but the only problem with Mount Gibson is iron ore. Who knows which way the iron ore price is going to go? So Mount Gibson share price is going to be highly correlated to the movement in iron ore. And my one thinking has been potentially not to include mining companies within this strategy. So no buying mining companies because ultimately the mining company share price will be correlated to the underlying commodity. But I had a look at their quarterly report, and I think there is potential. Mount Gibson is underappreciated by the market, and Mount Gibson might be undervalued. So what I did is I took profits with Appendix, which is a smaller iron ore play, and I bought some shares in Mount Gibson. Share price has gone down a little bit from when I bought, but not much. Bravura, Bravura is, when you look at the daily chart with Bravura, it's pretty ugly. But you can just see the share price after a massive drop on the 7th of March. The share price dropped 54%. The share price is just slowly grinding upwards. So when we look at the 1 hourly chart, you can just see that grinding upwards state of the share price, which is telling me because the share price was significantly high, a lot of supply of shares coming onto the market. So whenever you see this run up in the share price, like we did in 5th of July, share price went from, I think on the daily chart, you can see the share price rose in that one day, it rose almost 10%, 9.2%. So whenever the share price rises like that, you're going to have extra supply coming on board. But the main thing, we didn't see significant selling. And in fact, the high peaks in the volume is buying. So share price going up. So that fills me with promise that fund managers have seen potential with this, another turnaround or possible turnaround story, and the share price is grinding slowly upward. So I bought shares at 52 cents, share price now at 52 cents. So keep an eye on that, and I'll maintain a position in that. Hopefully that slowly grinding up continues. Electro-optics, a lot of volatility in this company's share price, and that's why I'm probably a little bit more active with this company. But when you look at the daily chart, I think there is definitely an argument that the share price of this company has moved into an uptrend. Definitely sentiment has shifted from highly negative to positive in regards to this company. So the daily chart looks really good. The hourly chart looks really good as well, and consistent, pretty good volume as well. I just want to see the share price get above about $1.30, because that's the highs we saw in the 19th of July. You can just see a massive run up in share price between the 6th and 7th of July and the 19th. And whenever you see that massive run up in share price over a short period of time, there will be profit taking. And that's exactly where I took profits. And then I bought back in on this particular dip. Forget exactly where I bought. It was this little dip, and that gave me a promise. That gave me confidence that this dip had finished when the share price did recover. And that's when I took another position in the company. And I'm just hoping the share price gets above $1.30. That's my expectations with Electro-Optics moving forward. Baby Bunting. This is a company that released some sort of trading update. I had a look at it. I wasn't that convinced it was good. The market disagreed with me, so I decided just to listen to the market. A beautiful, nice bounce in share price over a couple of hours. Share price up 15% in the first hour, and then up another 5% the next hour. Nice pullback, exactly the sort of pullback you want. And then when the share price hit a support level, share price has gone high up. So hopefully the share price of this company gets above $2.05 and gets to sort of a longer term high. But if you look at the daily chart, it's still pretty ugly. So it's not convinced. This is not a confident trade, but maybe the bottom has been reached for Baby Bunting, and massive volume coming in as well. So massive volume for Baby Bunting. And SiteMinder, another company I'm not that convinced with, but the possible turnaround in share price. Share price has been a downtrend. Share price reached the hold highs we saw back in February, and it did struggle. So if we look at the 1 hourly chart, saw a little pullback and some nice buying coming in last few hours of trading on the Friday. So possibly that was just some random sellers, some old holders selling out because it reached the old highs we saw back in February. Yep. So the way to look at this is a lot of shareholders bought in February, March between about, say, $3.80 and $4.40. So because they watched the share price go down after they bought, they consider this company to be a dog stock, and they say to themselves, whenever the share price gets back up to where I bought between $3.80 and $4.40, I'm going to sell. So the share price has been stuck between $3.80 and $4.50 over the past, since Friday the 20th, so past week. So that's the reason why the share price is not going up higher, is because there's supply of those shareholders who are adding shares to the market. But fortunately, we have had enough demand for shares in this company, and the chart is starting to look much better for SiteMinder. So this is another position where I've taken, where I expect the share price continue to rally after the good announcement on really good volume too. So always look at volume. I always look at volume. A really good volume coming in, and that's a sign. Fund managers read was it Appendix 4C that got the market excited? More than likely, it was Appendix 4C. The fund managers saw the Appendix 4C, they liked what they saw, and they're starting to either add to their position or take a new position, the first position in this company. So that's all the charts of companies in my portfolio. Now let's have a look at some of the companies I am following in the next week. For that, let's have a look at the XGO. Have a look at the daily chart for this, and just going sideways. There's no trend in the XGO right now. So whoever tells you there's a trend, either up or down, they're wrong. There is no trend in the Australian markets right now, unlike the NASDAQ, which has been an uptrend for a while. Really, the NASDAQ has been in an uptrend for the last 6 months, almost 6 months. Now, we have seen a little bit of a pullback in the NASDAQ, but it has reached the old resistance, new support level. So if we see the if we see the NASDAQ get below, what was about 15,200 or so, now that would be not a good sign moving forward, but it's remained above it. This is just a little pullback in the NASDAQ. No concerns with the NASDAQ at this point in time. Dicker Data. So, what I'm finding myself doing in this 1 hourly trading strategy is I'm looking for companies with good announcements. And I'm also looking for some really good volume. And that's my sort of go to strategy right now, looking for those really good announcements and hoping there's some good volume. So, Dicker Data did release a good announcement. Well, when I say good announcement, I'm just looking at the market reaction. So, share price did increase, I think, on the day 4.7%. And when you look at the 1 hourly chart, possible turnaround here. And the other thing is really good volume coming in. So that's the main thing, massive volume coming in compared to what we've seen in the past few months. So hourly chart starting to look interesting. There was a little bit of selling in that first hour. And the main reason is a bit of extra supply coming online because of those shareholders who bought previously. But unfortunately, when you look at the daily chart, and this means I'm less confident in this trade. The share price is still in a downtrend. It's been a downtrend for a while. You might do some sort of valuation of this company and think it's cheap right now. And that could actually help if more investors out there do a DCF or something and find value that could support the share prices of this company at these levels. P ratio says nothing. Dividend yield 4.6%. So anyway, so that is a potential buy. I'm just going to wait to see what happens over the next few trade days. If I see the share price fall, say to $8 or so, that would be negative. City Chic, possible turnaround story for City Chic. They did release a really interesting announcement that did cause a lot of excitement in the market. Share price rallied a lot, up 28%. And you can see the share price starting to break out on the 26th of July, when the share price was around about 35 to 37 cents. So share price has increased a lot, but even though the share price has rallied a fair bit over the past few trading days, the market cap of this company is still $147 million. So I think the bottom has been reached. Huge volume coming in as well. Look at that hourly volume, massive volume. Even if you look at the daily chart, we have seen pretty big volume, but we have to go all the way back to March. Massive volume coming in November, December last year, but that was off negative news. So long-term downtrend, possible turnaround story. Wouldn't be surprised to see, because of the rapid rise in share price, a bit of a sort of a dip in the share price, profit taking. But the very fact that the share price in the last 5 hours of trading on the Friday, the share price actually kept on going up. That's a good sign. That means there's enough demand for shares in this company to prop up the shares to take on that extra supply of all those negative, stale shareholders, past shareholders who have seen the share price of this company plunge from $6.50 to $61.50. So share price is still down 90% from the highs we saw in late 2021. Another Matterhorn pattern. Flight Center. This is just a little, I'm just going through some charts, and I saw the share price pull back. And as soon as it hit a nice little support level, share price took off in the last hour of trading. So this is a potential buy just because of a bounce off the support level. And that's all I'm going to say about Flight Center. So don't really follow this company all too closely. I'd probably even say there might be an argument that Flight Center is overvalued. Some investors will look at, say, the long-term chart and see the share price is significantly down from when it was prior to COVID-19. And I'm fairly certain Flight Center did a significant capital raising. So if you look at the market cap of this company, it might be higher now than it was pre-COVID because of that significant capital raising. I could be wrong about the significant capital raising, but that's definitely true for Webjet. Webjet's valuation right now is higher than pre-COVID. And I think that's true for Flight Center as well. So just be wary. Just because the share price right now is lower than it was back then and significantly lower, it doesn't mean the valuation of the company is lower than it is now. Now on to National Tire. When you look at the weekly chart, another Matterhorn pattern there, but there is a bit of a turnaround. Daily chart, share price starting to go up. So it has moved into, say, a medium-term uptrend, not quite a long-term uptrend just yet. And when you look at the short-term uptrend, share price is moving up. And this company had a market cap of 83 million. It says price earnings ratio of 40.3, but you got to ignore that, because more than likely their profit fell a fair bit in the last year. In fact, we can look at it. So profit, yeah, this company was not profitable in the last year. Has been profitable the 3 previous years. In fact, in 2000, actually that's half year numbers. Let's look at the yearly numbers. So back in 2018, this company had a profit of 4.5 million, 2019 profit of 6.4, 2020 4.6, and 2021 20.3. In the last year 9.4. And that's the half year. The last half year was negative. That's why the P/E ratio is so high. So I think the market is just expecting that the worst has already been felt by this company, and eventually we're going to see improvements in the company's financial performance. Remains to be seen. AMA Group had been under pressure, fair bit of pressure. The company did, you can look at that chart, pretty ugly. That's a daily chart. But the company did release a pretty good Appendix 4C. So I just put this onto my watch list, but there's a pretty strong resistance level at around about 14.5 cents. Now, that resistance level was support, and the share price fell through that support level in May of this year. And you can see why that was a support level. If we go back to August and June last year, share price bounced off 14.5 cents about 3 times. So the more times the share price can bounce off a level, that means there's more strength in that support or resistance level. And then when it falls through on strength, that means there's some sort of strength in that breakout of the share price. So that support level now has become resistant. And we are seeing the share price of AMA Group struggle to get above 14.5 cents. Technical analysis does work. It's really struggling to get above 14.5 cents. So it reached 14.5 cents a few days ago and then pulled back. And then look at it. Look how many times it's just been cradling 14.5 cents for a while. Gets to 15 cents on occasion, but as soon as it gets to 15 cents, we see some selling. Share price has pulled back to 13 cents. So if we see a break to 15 cents on strength, on pretty good volume, that would be a good sign moving forward for AMA Group. Not a high quality company at all. Smart Group, I put this into this particular video because when you look at the daily chart, beautiful uptrend in share price. And then we have seen a little bit of pullback. Last time we saw a pullback in the share price in March, that was a time to buy. So is now a time, we've seen the share price rally in the last 2 days, is now a time to buy Smartpay? Possibly. I'm going to actually circle that. Just based off this, just based off the daily chart. Maybe now is the time to take a position in Smartpay. And if we look at the 1 hourly chart, it doesn't look as good as the daily chart. So this would not be a 1 hourly trade if I do take a position in this company. But again, the share price has had a nice bounce. Not only that, just shows you how important volume is. Share price fell fairly quickly from $1.81 to $1.45. And then at its bottom, massive volume came in. So that's sort of, you could call that capitulation. But that tells me when the share price got to $1.45 or below $1.50 or so, there was a lot of buying, a lot of interest in this company, more than likely fund manager or something. And that volume continued in the next few hours. And that's why the share price has rallied. So a potential buy for Smartpay, just because it seems like $1.45 is a really good support level now for this company. In fact, I'm going to put just a line there, support level there. Not only that, if we take that support level, so there, could you just see back in May, share price got above $1.45, then pulled back, and you can see all these one-day candlesticks with a shadow to the bottom of the main body. So whenever the share price got below that $1.45, there was buying. It happened on 1, 2, 3, 4, 5, 6, 7 days during that period. Whenever the share price got below that level, buying. And we've seen it again in the last few days. Mitchell Services released a really good announcement, but there's just not enough. This company could be really, really cheap. I've already actually did a video a few years ago saying this could be one of the cheapest companies on the ASX, but the company has continually disappointed and it continually looks really cheap. But the main reason I decided to put this in the video is I think share price has broken above the long-term downtrend. This is a long-term downtrend. In fact, we have to go all the way back to 2019 when the downtrend started. and it has broken above that downtrend. I just need to see the share price get above, we'll say 45 cents before I become interested. Although we could say maybe take a little sneaky position at 39 cents and hope and expect the bounce to come. Temple & Webster, I almost took a position in this company, almost. Share price broke above this resistance level back in the middle of July, and the share price has just continued to go up. Beautiful looking 1 hourly chart for Temple & Webster. Index company has not released any announcements, but based off the 1 hourly chart, this is starting to look interesting. If share price gets above $2.03, nice sneaky short-term trade possible. And then if we look at the daily chart, probably not excited about Index just based off that. I didn't show you the daily chart for Temple & Webster. This looks pretty good as well. Just like Kogan, it's starting to look more bullish. Nine Entertainment. So when you look at Nine Entertainment daily chart, it is going sideways. So it's in a trading range. What we'll do is put a line there. So it's trading between $2.20 and $1.85. You can see share price got to $2.20 3 times in the past: September last year, December last year, also February of this year, and has got there fairly recently. And when the share price gets to $1.85, which has happened 3 times in the past as well, almost 5 times in the past, that's the time to buy. So you could be trading this, just buy at $1.85, sell when it gets to $2.15, and that's a nice, 20% rise. Not quite 20% rise, say 15% rise. So what I'm doing here is, if the share price breaks above $2.20, that would be a buy. Not only breaks above it, but breaks above it on strength and remains above that level for a few days. That would be a buy. Similar to, the company hasn't released, I don't think has released any positive announcements, unlike Sigma Healthcare, which definitely did. And this company has a nice little support level at 75 cents. So we know it's a support level because it has tested it twice now in the past week or so, and the share price has rallied off that. In fact, if we look at the 1 hourly chart, we can see the share price, when it opened up after that really powerful announcement on the 6th of June, where they're now taking over, was it Chemist Warehouse or something from EBOS Group, share price opened up on that day at 75 cents and then rally. Share price pulled back to 75 cents on the 17th of July. The share price rallied. Share price pulled back to 75 cents on the 4th of August, and then we saw a rally. The problem is the rallies are becoming less and less strong. So all those who have wanted to buy in to Sigma Healthcare, they're probably already bought in. So there's less and less demand now for Sigma Healthcare shares. So I wouldn't be surprised to see the share price of this company actually fall below 75 cents. Ramsay Healthcare, just based off the hourly chart. Now, if you look at the daily chart, nothing to get really excited about this company, but possibly on the hourly chart, there is a bit of a turnaround. We have seen the share price dip back from reaching $59.50. Now, we need to see the share price rally again above $59.50 for this to be confirmation of a new hourly uptrend in the share price. But the daily chart means I'm less confident about that happening. Not so with Navigator Global Investments. In fact, this hourly chart looks beautiful. And not only does the hourly chart look beautiful, the daily chart looks really good too. This share price has broken out higher high, higher low. You can see the share price broke above this resistance level at $1.31. It took time to get there. In fact, it took a period between, it took over a month to get above that resistance level. And then as soon as it got above it, just see 2 massive up days in a row. And share price now $1.50. Last time share price was $1.50 was 1 year ago. So we're talking about a 1-year high in this company's share price. So that's exactly what you want to see after share price had been in a long-term downtrend. So maybe things are turning around for Navigator Global Investments. I have done no research in this company. I'm assuming they're a fund manager or something. Now let's have a look at some commodities. Oil is probably the most bullish of the commodities. Hourly chart looks pretty good for oil. That's probably why companies like Karoon Energy, Woodside, Santos are all in nice little short-term uptrends. And I have all those 3 companies on my watch list. US 10-year. In fact, we're going to look at a daily chart for this because you can see possibly a double top in the US government bonds 10-year yield. So we saw the yields reach 4.2% back in October last year, and again, very recently. And then as soon as it reached $4 or 4.2%, look, collapse in the bond yield. You can just see it going sideways right below that resistance level and then collapse. Now, if you are of the mind, of the belief, of the opinion that interest rates will fall in the next year, the way to play that is ETFs. So there's an ETF called TLT, iShares 20 plus year Treasury bond ETF. It's on the NASDAQ, so I'm not sure if there's any similar ones on the ASX, but this has been in a long-term downtrend because don't forget that the price of bonds are inversely related to the yield. So if yields are going up, the prices should fall. But on the flip side, if yields start going down, interest rates start going down, Treasury or the price of Treasury bonds should start going up. That's why the Treasury bonds, or this particular ETF, reached a peak in 2020 and has been falling ever since. Beautiful downtrend. Not quite as low as October. Remember, October was when we saw the peak in the 10-year Treasury. So I think this could be a sneaky, nice little play. So it's almost halved since those highs. And, why did I want to look at the 5-year US? Oh, yeah, 5-year US. So the 10-year US had a double top. When you look at the 5-year bond, this is more like almost like a quadruple top. 1, 2, almost 3, 4, and almost 5. So it looks like definitely 4.4% for the 5-year yield or bond is definitely a resistance level. And if this particular bond gets above 4.4%, that would be a very negative move. I don't think it's going to happen, in my opinion. Okay, so that's all I really have for this particular video today. If you have any questions about any companies I've mentioned or talked about, if you have any questions about my portfolios, the makeup of those portfolios, leave your thoughts, your questions in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.